Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Okay, so SPY, and that says SPX, but it's the SPY that we have on here. What's the difference? Obviously, the SPY is roughly a tenth of value of the actual index, and it's an ETF as opposed to an index. At any rate, you can see here that we've got the dots that are overlaid on the top are parabolic stop and reversals, and then down here we have our Williams percent R, basically big trends per hour. What we've done over here on the left, for those of you that know percent R, you know that it traditionally comes with a 0 to -100 scale, just a little bit too convoluted for us, so we just flipped it and made it a 0 to 100% scale. Furthermore, the way that we, just to give you a quick little understanding of how we trade it, it was traditionally created as a overbought, oversold oscillator, so looking for reversals. The funny thing is, the ironic thing is I'm teaching about trying to pinpoint market reversals today, but we're not using percent R in that manner at all. In fact, we use it the complete opposite. What we found is that when securities go overbought, they tend to stay overbought, and vice versa. When they go oversold, they tend to stay oversold. So instead of using these, quote, overbought, oversold levels as trying to catch a falling knife or trying to pick a top, we've used these as basically levels when you've got your top 20% of bullish moves and your top 20% of bearish moves. So we're only trading the big trends. And we've got some pretty, these are what we call retests over here, or short-term great buying points. You can see them a couple different ways. So we've developed a couple of different trading strategies off of this. Today, what I want to focus on is, number one, the 50 line. The 50 line is going to be your general change in trend. And I want you to take a look at this just from a quick eyeball test, right? That's your very first, before you get in there and start nitty-gritty back testing on new strategies. What does it have to pass? It has to pass the eyeball test and say, okay, well, what thing did it look like it worked very well? And just to kind of show you what's going on here, this is a new bearish. Let's just go left to right here. So this is our first new signal on this chart, going from left to right. You see we're percent R, which is percent range, and we're using it on a 30-bar setting. So we're looking at the total, the highest, we're basically looking at the highest trading value versus the lowest trading value over the last 30 bars. Take the difference of those, and then we take the current trading value relative to that range, right? So it gives you a percent within that range. So if we're upwards at 100% on percent R, then we're making highs, and vice versa. If we're all the way down at the bottom at 0, we're making new lows. So just so you understand that a little bit better. The 50 line, what we look for here is a cross below it. Now that cross isn't bearish yet. We look for a cross below it and then a confirmation within 5 bars. So if you're doing this on the hourly, daily, weekly, monthly, and so people ask me, well, what would you do on the monthly? And a lot of folks need some very liberal market timing for their 401ks that they can't be very active with, and it's still a very, very effective way of doing it. But at any rate, you can see here, once that crosses below 50, then you've got what we call a bear setup, which would roughly translate to say, let's say this bar right here. I'm trying to visually do a straight line. And once that does, let's actually do the straight line to be precise for you. Okay, so it actually does not go below 50 until this bar. So then within 5 bars, what will we want? A close below the setup bar's low. So the reason why we put in that, I would call it a time constraint, is because if it doesn't confirm, i.e. once it goes below that 50 bar, it's just a setup. And it may certainly go lower, but if it doesn't close below that setup bar's low, then it may not have been a truly strong move. We could just be muddling around the bottom or the top, depending upon what type of signal it is. And then furthermore, if that signal doesn't happen within 5 bars, then it's not strong enough anyway, right? Because it needs to happen almost immediately. And we give it that time stop. It was, we've looked at 5 bars and 10 bars, but we want it to happen in a relatively quick manner. Otherwise, what's it doing? It's just kind of not really, it's not moving, it's not confirming your setup, which is what you want it to happen. So in this case, we've got that going on. It looks like it could have done that all the way. This would probably be the confirmation right here. At that point in time, what do you want? You want to see parabolic stop and reversals above the price action to be bearish, right? So then what are you? You've got both indicators telling you that it's bearish. So from a market timing standpoint, number one, looking for reversals. And I guess I'm trying to figure out the best way to explain this from A to Z for you without just opening up the fire hose and confusing you. We can see this is a clear trend-based system that I just taught you. Now, once you're in this particular signal, how can you potentially find out when there's a reversal in the works? 2 ways. Number one, you want to look for a change in the parabolics, stop and reversals, right? Take a look at this. This entire trend down, our parabolics were bearish. They were above the price action. It wasn't until this bar right here that they were able to, there we go, that bar right there, that they switched and became bullish. Now look at that. From a standpoint of trying to pick a bottom, you're only about 4 or 5 days away from that. And if you can consistently be this good, then you're going to be consistently profitable. Ray, it's a 30-day setting, 30-bar setting. Sorry for that delay in that answering. I just saw the question there. But yeah, it's a 30-bar setting on this %R that you see right here. The 30-bar setting desensitizes 14-bar %R. It's just way too volatile and really makes it more efficient and smooths it out. You can see here how effective it is at staying bullish and keeping you in those trades. Why? Because this is now we're neutral. Now remember, I told you, what would you be looking for at this point in time as well? Over on a day like this, you might start to see the sentiment indicators start to signal you that, hey, there's a lot going on here, especially in a day like that where you've got such a wide, really a recovery, but really bearish in the morning. And, in the end there, you might, all 3 of these things are really going to help you kind of put together what you should be doing every morning when you look at the market, or every week, depending upon how active you are as a trader. And TJ, the settings on the parabolics are, I believe, 0.2 and 0.02. They're basically what they call steps, and it may just be max or min. Written, different platforms say different things, but your setting is going to be 0.2 and 0.02. And then MA, the BTTK, just basically stands for Big Trends Toolkit. It's a toolkit plugin for Metastock that includes all of our indicators and systems built in. But that's what the BTTK stands for. So at any rate, you can see here that, do you get bullish here? You've now successfully targeted a great reversal. And if you're in here trying to find the ultimate low or high every day all the time, then you're probably not going to be trading very long. I'm probably talking mostly to the folks out there that know that you're not going to catch the ultimate top and bottom consistently. You can certainly get lucky from time to time. I think everyone does. But for those people that let that get to their ego, I think they're the ones who really start to have a rough time and believing that they can. You want to, but you got to know that you should be more systematic. At any rate, when do you go actually bullish? I'm going to walk you through all the way from a bullish reversal, a bearish reversal. We just saw a bear signal trend-wise, and then how you start to see where you take your money out of that short. Now, when do you put your money in to a bull trade? Yeah, there it is. It's the cross above 50 gives you a bull setup. So let's do another line here and see how straight I can make this. Okay. So it looks like that's our trading day, which we get a cross on, let's say, day 0. And then we have 5 days, day 1, day 2, day 3, day 4, and day 5, or bar 1, bar 2, bar 3, bar 5. The very next day, what happens? We close above the setup bar's high. So we need to see a confirmation, a close below the setup bar's low for a bear. And then for a bull confirmation, we need to see a close above the setup day's high. Sounds a little convoluted, but it's very, very simple and makes logic sense once you think about it. So anyway, once you go here, you can see obviously you're not looking for, this is a general change in trend type thing, where you're not pinpointing. Again, we do not use this on as how we get our entry triggers for options trades. We look for typically much more shorter time frames with lower risk entries based on percent off. But right now we're looking at a much more generalized market timing approach. At this point in time, we are bullish. You can see we have no idea. Most of the time, it works out. This is one of our best systems that we've created here at Big Trends. It's about 2 years old now, and from a market timing standpoint, it's been one of our best systems. But it's obviously not right 100% of the time, like anything else. But you can see it works very, very well here. The only time you get all the way up here, and boom, what happens? You see your parabolics flip to be bearish. So at that point in time, do you sit there and start buying puts? You're going to be one of those people? You're not. At that point in time, you're going to start really being protective, either locking down your profits, whether you've got a 40% gain on a straight call or a 300% gain. At that point in time, you really want to start investigating and looking at the structure of your charts to determine if you've missed something. But it should be a signal to you, basically a red flag, that this is potentially near an end. Consequently, though, within 2 days, 2 bars, we get a reversal of the parabolics to go right back to bullish. At that point in time, we're bullish again. No questions asked. Goes and stays that way for a period of time. So you see that we were able to catch from here to here and then from here to here. For only a couple of days were we out. Now, I just had a question come in from MA, did we get out pre-flash crash? And I'll walk through you with that to show you what happened. The short story is yes. So here's what happens. We get back in, you're bullish and bearish, right? We're bearish again on here. Do you think it's just by happen chance that started to see more flip backs and forth on the parabolics before a massive rollover? No, the market's starting to weaken a little bit, slowly but surely. But what we want to do is still follow the system. We're still bullish and confirmed above the 50 line on %R here. So the only thing now, that's guiding us is the parabolics. We're looking for those reversals, right? You see, for a very short period of time, we go bullish. You can see that's not a great days. What happens is you get back in bullish here, you're done here, and then you get out at the open on this bar. So the details are in the chart, obviously, and I'm not sure what we opened at here, but you definitely want to follow the system. Then eventually that day, which we got out in the morning, gives you a pretty heavy little candle down, which then flips the parabolics right back up. So then what happens? You're bearish all the way until here, which MA, as you can see here, is keeping you bearish roughly about a week and a half, 2 weeks, if I remember correctly, before the flash crash. Through it, again, all truth aside, did we get out at the bottom of the flash crash? No. I mean, that would have been just an absolutely phenomenal trade. But, we weren't looking to obviously get out of everything at the middle of that bottom. I mean, it would have been great, but we will follow a system. And, we're not, this is, for example, I manage an ETF options portfolio that I spend looking at every single day, spend 80 or 90% of my time on it. So from a market timing standpoint, we're not really looking to, this is what our individual stock and ETF options programs do. This is just a general market timing. Nonetheless, it was still profitable. And, you can look all the way down here, this bar we went bullish again. Not too great of a signal, as you can see here, right? Got in here to be, I'm sorry, we're not bullish anymore. I knew I was skipping for something. You get out of your bull trade here. We didn't get into, let me start drawing lines here just to be very, very accurate. Here's your bear setup. Your parabolics are, let's walk this through, because sometimes there's, I can teach it to you, but then there's still going to be questions as you go through it yourself. Here's this harsh fall off. Now we go from bullish to a bear setup on that day. If we close below this bar's low within 5 bars, which we do, then we are bear confirmed. So that you can see here within about 1, 2, 3, 4 on the 5th day right here, we close below it. So we were actually just a couple of days before the flash crash of getting in on the complete bear side. So remember, what you want to do is, this is not just a full out buy straight puts ticket. This is just get out of your bullish trades. Start potentially looking for bear trades on individual stocks. But as far as the overall market is going, you still have to go back and get that bear confirm on the 50 line. So just wanted to clarify that. And then when do you pull out of that new bear position? You've seen the reversal coming based on literally the day that we got the reversal is the day that we got a bear signal, because that's just obviously a very, very strong candle. But when do we get out of this? Number one, you get out of the short trade when this happens. Take a look. So again, that whippiness was just crazy. But again, want to follow the system. When do you potentially, if you get out, that shows you that you could be near a bottom, a short-term reversal, which in this particular case was not the end-all be-all bottom. But when do you look for a potential trade? Right here. Look for a close above. We actually, let me see here. Okay, so we actually, and this is this close above, this is our new bull setup here. What we're getting into is a little bit of the nuances of the trading system. Here's your bull setup right here, right? What's going on though? Your parabolics are still bearish. So are they in agreement? No. So then you have to throw this signal out. And this is what's good to walk through this with everybody, because you'd get on your own and try to do this and you'd run through all of these things. So the bottom line is that you want your percent R and your parabolics to be speaking the same language and be on the same side of the table. So if they're not, what does that mean? It means that it's not, they're not in agreement. So then you go all the way over here, you throw out that signal. At this point, you could have had another one because the parabolic slipped bullish within a couple of days from that initial signal. But you can see here all this chop, which is kind of interesting. We get another setup here. On this day. And then the following day, we get a close below. So now we're bearish. Why? Actually, no, we're not. We're still out. It's always wonderful to go back and review old charts. You always wonder why they're such great charts. Anyway, this is yet another signal where you get a bear setup, but your parabolics are bullish. So it keeps you out of the overall trade. The benefit of this is that when they're not in agreement, what is the market typically doing if you have two indicators saying two different things? The market could be in a chop. Well, do you want to be in any side of the market, bullish or bearish, when the market's choppy? Of course not. You might want to be selling some premium on some options, but you don't want to be in the market on a trend-based way, because you're not going to get anywhere. I'd rather have my capital somewhere else, and obviously there's an opportunity cost to that. So there's a lot going on in this chart, especially when looking at with this system. It seems simple at first, but as you really get to it, remember, you want to have your parabolics and your percent R in agreement. You use your parabolics to find out when that prevailing trend is becoming exhausted and looking for a reversal. But you look for that 50 level percent R confirmation for the change in trend to get into new trades. So very, very interesting. This is a classic simple system you can do on the hourly. We use the 80 and 20 levels, which we haven't talked about here. Use the 80 and 20 levels for stocks and ETFs. Obviously they're I don't typically trade 80 and 20 with broad market ETFs, more the smaller ones, because you want something that's going to be much more higher beta, right? That's going to be the bigger trenders. So a lot on that chart.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.